Hello, my name is Timothy Lee Rice Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Man, my headphones acting crazy again, man. Is somebody in the Discord? Somebody in the Discord say something. So I mean, in the Zoom, say something. Let me see if my headphones working. Okay, yeah, I hear Marco. Appreciate it. They was when the intro was on, I couldn't hear it. I guess I could have hit that to see if it was working. All right. Yeah. Good evening, everybody. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome, but I want to give you a nice hearty thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That should be Big Spot if you don't hablo español. And you're now in tune to another episode of the Price Action Recap. You hear me? That boy going AI crazy. I couldn't hear that. Could y'all hear that sound on there? I couldn't hear that. When I was just playing that, I couldn't hear it. Could y'all hear that sound? Did y'all hear that sound? 1 2 1 2. Is anybody saying anything? Okay. YouTube said this sound right here. On that. You don't hear nothing on that? All right. Yeah, it's not playing. Like YouTube can hear it, but like I can't hear it when I play it. All right, we'll try this one more time. See, I can hear it on YouTube, but I can't hear it on my side. I don't know. Windows 11, man. I keep Windows 11 give me so many headaches. Windows 11 be giving me so many headaches, man. Ever since I changed over to Windows 11, I just been having headache after headache after headache. It's a guy that I follow on YouTube. He do computer stuff, and he said that Windows 11, I think it's called Enterprise something, He said it's a stripped down version and it don't have all the issues. I think I'm gonna buy a key because they got keys. I think you can get a key through his site for like $17 using his account. I don't want to do it because I'm gonna have to reinstall it from scratch, then reinstall all my software. But this is getting on my nerve. Ain't that right, T'Challa? T'Challa say that's right. Man, this is a compute. He build computers, and they sell keys for software. This is a. I mean, I work with computers too, but this is a reputable dude that, you know what I'm saying, that promote this company. It's a company that sell activation keys for Windows. They sell, you know what I'm saying, they sell activation keys for Windows. He a reputable dude. Look, man, I found my financial advisor on YouTube. It's reputable people on YouTube. Present company included. Voila! Look at me. You feel me? Hey, man. Y'all do me a favor, man. Hit, I'm too loud or something?
No, it's just close your door.
Oh, okay. Coming up shutting my door like I want to be in here in the heat. You know, I can't turn my fan on because it'll catch my green screen here. You know what I'm saying? Shut the door like, you know, I got these lights on. Well, I'm being here sweating. My fan on the other side of the room, a little portable fan. Y'all ain't come here for that, man. Y'all do me a favor. Hit the like button for the algorithm and share it with somebody who you think might get something out of this, man. Without further ado, let's jump over on the charts. I ain't gonna keep y'all here long, man. I ain't gonna keep. Let me see who in. Shout out to everybody that's in here. Who in here, man? Let me shout out my folk. We got Steve in here. We got Marco in here with the headshot. Marco say Deborah ain't gonna be the only one. Rhonda ain't gonna be the only one with the headshot. I'm gonna pull up with the headshot like this right here. That's how Marco is on his headshot, y'all. And then we got Valentine up in here. What's going on? I ain't seen Valentine in a while. Valentine been playing hooky. That's gonna eat me up. Why I can't figure out why I can't hear that sound on this side. That's really gonna bug me as to why I can't hear that sound. I'll figure it out later though. Well, I ain't gonna be able to figure out later because I'm gonna be only way I can't hear it in Zoom. The only way I can figure it out is in Zoom. Shout out here to Learn to Share over there on YouTube. Shout out Will. What's going on, Will? We got Kim over there on the tube. We got Felicia over there. What's going on, Felicia? Shatter over there. What's going on, man? Hey, man. I see more numbers than I see names, but them all the names I see, so we're going to go ahead and get into it, man. Anybody got opportunity to trade today? Anybody do any trading today? Anybody look at the charts? Oh, I ain't did this in a while, man. Before we get started, did price do anything today that caught anybody off guard? All right. Did price do anything today that caught you off guard? If price did something that caught you off guard, raise your hand. Say, Tim, price did this. It caught me totally off guard. Can you walk through the price action and help me decipher what I missed? Because I know price is algorithmic, and if price slapped me upside my head, that means that I missed a signature that IPTA was laying out in front of me. Right? Can we walk through price and see what I missed? If that's you, raise your hand. Whew. Say, hey, Tim, hold up, wait, can you walk me through this? All right, man. Feel free to do so. I don't see nothing right now, but feel free to do so. Let's jump over here to the Charty Tarts. Let me turn my fancy dancing on, and we're gonna jump up here. We're going to jump up here to a daily chart. The daily time frame. All right. So today's price action was Wednesday, March 25th, right here. As you can see, we had an inside day. Well, Tim, what is an inside day? I'm glad you asked that question, little Timmy Rogers. An inside day is, man, look like it's peaking. Is my voice like loud? Look like I'm peaking over there. Do it on YouTube. Is my can we get out of these ranges, please? Is my voice really loud on YouTube? Yeah, I ain't got no gain on there. It sounds like puberty. Shout out Kev. Is that Kev that's been missing? Is that Kev that's been missing in action for 42 years? Is that Kev that's been missing for 42 years? Let me see here. I know I ain't got that picture around no more. I ain't got that picture around no more. I wish I still had it around so I could if I had it on my old computer, I could pop it up. But I ain't got it on my new computer. So if that is Kev, you got away by default. You got away by default. And that is him. Man, I wish I had that picture. And where's my phone? Man, I ain't got my phone over here. Man, I wish I had that. I wish I had that. He said, oh, not that Kev. It says different. Okay. All right, so boom. Inside day. Start back over. Rewind. All right. Looking at our daily chart here. We see today, Wednesday, the 25th, we had an inside day. What does that mean? We traded inside the range of the previous day, right? So this is Monday's candle. This is Tuesday candle, and this was today's candle, Wednesday. We did not trade outside of the high or the low end of the dealing range from yesterday. All right, so we had an inside day. Okay, when we go over here and check our down close candle, right? We're checking our down close candle. Was this our down close candle? Oh, yeah. I'm tweaking. This was the old down close candle we was checking there. But since we moved out of that range, we created 3 consecutive down close candles. Then the next day when we made an up close candle, right, we closed back above mean threshold of that down close candle, right? Then that was Monday. Then Tuesday, right, we created another down close candle, and then here on Wednesday we had an inside day, and when we checked that, we closed back above mean threshold of that down close candle. Right? So we're slow again. We're slowly eking down, right? But every time we come down to a discount PD rate. Speaking of a discount PD rate, hold the presses, rewind. Last night we was talking, Yolanda started asking a question on the, what's that last night? Whenever we did the price action recap, and we was talking about Michael's video when he was talking about time distortion. Yolanda asked the question. We went back and we started watching the video. While watching the video, right, she brought it to my attention that Michael had his B adjust off on his continuous contract. Now, let's go over to the continuous contract. There's NQ1 exclamation point on TradingView, right? When you have the B adjust off, right? For those who don't know, right? The B adjust, that's the button. When you turn it on, I don't know if you can read that down there. It says adjust for contract changes, right? I like to look at it in the sense of inflation. Every time we have a contract rollover, this is contract rollover day. This is when that front month ends and you can't use that contract anymore, right? And you got to roll to the next expiry, right? Expiry, how you want to see it, right? Each time that happens, right? Inflation, I like to call it inflation, kicks in. So there will be an increase in the contract price from contract to contract. So when the contract increases, what B adjust does, B adjust changes the contract. It raises all the old prices to adjust for inflation, right? Let me see if I can break it down for you. When let's look up Tesla, right? Let's look up Tesla. So when we come to Tesla, right? Who remember back in 2020 when Tesla was like $1,500 a share? It was crazy. Tesla was so much per share. I can't remember exactly how much it was, but it was like a lot of money per share, right? They did a split. When they did the split, matter of fact, I don't want to give you half but information. So I'm gonna ask Gemini, what was the share price of Tesla in 2020 before the stock split? All right, I should have put it on fast so it'd go fast. It's on thinking right now. I could have did it way quicker just doing a Google search. All right, they did a 5-to-1 stock split, right? So right there, they were $2,000 a share before the stock split. I said 1,500, right? They announced the split at $1,375, and on the day that it split, they were $2,000 per, so $22.13 per share, right? So however many splits they done did since then, right? So on August 20th, they were $2,213 per share. If you look at Tesla right now, it's only $385 per share, right? And so if you go back to what date that was, August 28th, right? So if we come back here to August 28th, right? August 28th, 2020, right? We go to August 28th, 2020. If we look there, right? August, see right there, split. Right, that's the split date. They did a 5-to-1 split on that date right there, August. So if you look at that now, if you look at what it says there, why is it not highlighting? There it is. On that date, it says that it opened at $148.20, but back then it was $2,000.12. Right, on the last day before the split. So that's August 28th. Yes. So when it closed, it's a last day pre-split trading. It closed at $2,213, but it says it closed at $166.11. So now all of this price history has been adjusted for the splits. You had a split this day. You had a split this day, right? You had a 3-to-1 split there. You had a 5-to-1 split there, right? and that's all the splits. That's all the S that I see. But if you go back, the price has been adjusted to show, hey, instead of it being a way spike up here at 2,000 on this day, it's showing the adjustment for the splits. Right now, take that into the same idea of with the continuous contract, when the price on this day here, right? Now we'll go here and we'll turn the B adjust off, right? And we'll come here pre-split. This is a split, not a split, contract end. We come to a contract end date, right? And when you look at this, let me hide all this stuff that's on the chart right now. Right? When you come over here and you look at that low right there, right? As you see, that low is 24,000 even, right? That's what that low was during that contract month. So, I mean, that during that contract expiration, that low was 24,000 even, right? And then when the contract rolled over to the new contract, right, inflation went into it. So the new contract, just say on this day here, price closed. This is the split date. So that's the date that is split. And then this is the date the new contract starts, right? So looking at the last day of the contract, right? It closed at 25,015 and a half. Okay. Then when the new contract started, inflation hit, right? So let's put a line on that close date. I mean, that close time. 25. Let's change the color so we'll know, right? Going to make that blue. All right. So that's the close, 25,015 and a half, right? So the next day when inflation hit, when the new contract started, the next day, right, you turn the B adjust on, right? You see how that's the day it started. So we got to come to this date here. That's the date, because this is the day right there it started. All right. So the day prior to it closing, right? Because this is the new date, right? So the last day of the old one, it closed at 24,000. No, it didn't. It closed at 24,675 and 3/4, right? And that low was at 24,000 even, right? But when the next day and the inflation hit, now it's adjusted for that inflation, and it adjusted it by, come here, turn it off for a second, right? It adjusted it up 215 points or so, like for the adjustment. You see what I'm saying? The adjustment, it has changed by 215 and a half points. You know what I'm saying? When you turn it on, because if you notice, everything after the contract, after it started, like we'll put a vertical line there, right? On the date that it started, when you turn the B adjust on and off, as you notice, nothing changes in this area right here, right? Nothing at all changes since the new contract started, right? Because it's under the new inflation, if you will. Everything in the past, it has to adjust to make these numbers make sense in relations to the value of what this was back then based off the new numbers. And the farther you go back, the more of an adjustment it is, right? The more of an adjustment it, like you see, it's like jumping really far back here, right? The farther you go back, the more of a move it is inside the price, because it's adjusting everything over now, right? I said all that to say, okay, when you're looking at your continuous contract, right? When you're looking at your continuous contract and you're looking at it for PD arrays and liquidity that the algorithm is going to engage with, you want to turn your B adjust off. You want to turn your B adjust off. But Tim, why am I turning my B adjust off? Because you're turning, IPDA does not care about us adjusting the price for inflation. It doesn't care about that. IPDA only knows that back when this was the front month, right? So back during this time here, right? Back during this time here, when this was the front month, I made a low at 24,000 even, right? I made a low at whatever this low is right here, 24,239 and 3/4. I made a high at this. IPDA knows exactly where it made that low and where it made that high. IPDA knows where it made this volume imbalance during when this was the front month. It knows the exact prices where it made that volume imbalance when this was the front month. Right? So when you're looking at the continuous contract and you're looking back to get key levels, you're looking back to get discount or premium PD arrays, you're looking to get liquidity pools, you want to leave your B adjust off so that your liquidity pools are in the place where IPDA left them back then. And so you can have a more accurate depiction of what price is doing, right? For example, when we were discussing this, we were doing our chart prep, right? We marked out a bullish fair value gap that was created back here on August the 12th, right? And if I take that bullish fair value gap forward, right, for August the 12th, what did we trade down into on Monday? That bullish fair value gap that was created on August the 12th, right? That reclaimed fair value gap. When we came down into that discount, right? Reclaimed fair value gap. When we came down into that bullish mitigation block, right? When we came down, this candle right here came down and touched that bullish breaker, right? What is this right here? Michael used to talk about this a long time ago. You have a mitigation block with a breaker nested inside of it, and then you come back and trade to it. Woo-hoo! That's a powerful place for price to react to, right? And what happened when we got to that place, right? All right, come over here. Let's put a line on there. Boop. You see how we came down to kiss that? See how we came down to kiss that that bullish breaker right there that's nested inside that bullish order block. I mean bullish mitigation block. If I said order block, I'm sorry. You got a breaker that's nested inside of a mitigation block right there. Right now, we're gonna put that line there. We're gonna put that circle there, that line there. Now, if I turn the B adjust on, those PD arrays aren't there. You can't see them PD arrays there. You can't see exactly what the algorithm is reacting to if you have that B adjust turned on. Oh my goodness. Y'all do me a favor, hit a like for the algorithm and subscribe to the channel if you ain't subscribed. But the B adjust is interesting because I don't see no such thing on any platform, Interactive Broker, NinjaTrade, etc. Why just on TradingView? I don't know. TradingView, I don't know. I don't know why they have it. I've never had the B adjust on any other platform either. Right? The only platform I ever seen it on was TradingView. Right? I ain't never seen it on any other platform either. Right? And settlement, like I don't see settlement on other platforms. And back in the day when I was in Stocks to Freedom, and my like I want to say I think my NinjaTrader, I think it uses the settlement price for the daily candles. And if I turn settlement off, like my daily candles wasn't looking like my daily candles on TradingView, and or vice versa. Like on Ninja Trader, I would have to go back and look now, which I ain't gonna do, but I know it's like one day I woke up and my candles were different. So Ninja Trader has switched how they were using the settlement price for the candles. And I can't, this was like a couple years back, because I was like, hey man, did anybody candles change besides mine? I'm like, my daily candles don't look the same as my trading view anymore. And then that's when I realized if I turned my settlement off, then my daily candles, for example, right, if I turn this on and off right here, like if you look right here, right, if I turn this on and off, see how the candles are changing? Because when I turn it off, it's showing me the close of the 11th at the futures close at 5 p.m. Eastern Standard Time. But if I turn the settlement on, this is the close at the New York settlement. And then, like, all of a sudden one day, Ninja Trader just started using, I think, the New York settlement close for the candles. And I was like, what? And there's no way for me to choose that. And it just was doing it. And so, you know, for the candles to match on the daily time frame, it's like I would have to turn the settlement on and off for the candles to look the same, right? So, but I don't know why they give you that ability to change that stuff on trading view. I'm not sure, but it's always been there, because I never used to use that B adjust. Somebody told me about that B adjust years ago, because I was like, hey man, my highs and lows look different than y'all's, right? For example, here, right, when I turn the B adjust on, back when we made that this all-time high back here in October, right, we haven't made a new all-time high, right, since we made that all-time high. We haven't made a new we haven't traded higher than that high based off of how price was moving. But when I turn B adjust off, right, look how much closer we are to a all-time high, right, based off of with the B adjust off, right. It's like a whole lot closer when you turn the B adjust off. You know what I'm saying? A whole lot closer. But yeah, I don't know why they give you that ability to do that. But just want to put that out there as an extra tidbit. And if we go back over to our front month, and then we look at the PD arrays that we brought over, right? So when you come over to your front month, and when you bring the PD arrays over from the continuous contract, because all this price action over here is like super spotty, right? You can't really see nothing over there in that area, right? You just bring it over from the continuous contract and then just adjust it, put in the price that you got from that other contract. It might look funny, it might not line up with anything, it may just be floating in space. But if we come to that's the volume imbalance, right? So this is a volume imbalance right there. That's the volume imbalance from October the 24th, right? We got a volume imbalance from October 24th that we're trading inside of right now, right? And if you look here, that volume imbalance from October the 24th right here, this is October 24th, that volume imbalance there, it's a lot higher, right? It's a lot higher when you look at the front month. It's up here a lot higher when you look at the front month. Why is that? Because in the front month, right, it's adjusting for that inflation. You know what I'm saying? When the contract switched over, it's adjusting for that inflation. So this volume imbalance is way up here on the front month, but this volume imbalance was created way back here in November when we were still using the December 2025 contract. So back in December 2025, this volume imbalance, instead of being at the price instead of being in between 24,962 and 3/4 and 24,773 and 3/4, it was actually in between 24,455 and 3/4 and 24,305 and a half. That's where it was actually created back then, and that's what IPTA remembers. So when you bring it over to the front month, you don't want to put it, if there is a volume imbalance there, you don't want to put it on that volume imbalance. You want to put it where it was, right? And then with everything else, when Michael looks at the volume imbalances, he turns the settlement on and off to get the bigger imbalance. So whichever way the imbalance is bigger, with settlement on or settlement off, that's the one he's going to use for the volume imbalance. Okay. And then when you look at where we are now, right, we're still trading inside that volume imbalance over there, right? So we came down to that discount fair value gap. There was a bullish fair value right there, right? So we came down to that discount fair value gap. You can't see it over here because price is spotty. We're getting that from the continuous contract. These are the prices transposed from the continuous contract, right? In between the prices of 23,946 and a half and 23,804 and a half, right? That's where it was created back then when we was trading inside of that September 2025 contract, right? That's the price levels that. So we came down to that discount PD array, right? Because we're inside of our range. When we go up to the weekly chart, we can actually see, right, the range that we're trading in, right? This is, we talked about this before, right? We got all of this down here where we've come out of this area there, right? We've come out of that area there. So when we get us a Fibonacci tool, just put it halfway, we go to our highest high right there, and then we come down here and we go down, we just go there, right? We can click there, go there to below our order block right there. Right, so we come here below our order block right there, and once we get there below our order block, coming out of this area, right? So now we're coming, because we talked about this before too, as we were leaving this area, right? We just going up, 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 right? Never coming back to a discount, never coming back to a discount. Once we left that area, we went up, came back to a discount, right? Consolidated, went up, came back to a discount, went up, had a bearish breaking market structure. Now that we got a bearish breaking market structure, right, we've come back to a discount for all of this, right? Where did we not come back for a discount after leaving this area here? From there up. So we're looking at this as the range that the algorithm is trading within to come back down into a discount after we get this bearish breaking market structure, because we never offered a discount in this area right there. And once we got that break in market structure, now we're targeting areas of liquidity that we can sweep to the downside to manipulate to go back up, right? And where's the liquidity to the downside after this bearish break in market structure? That's internal liquidity for our range. We got liquidity there, we got liquidity here, we got liquidity there, right? We even got some all the way down here, but that's getting back inside of the breaker and the inversion fair value gaps, right? So that's where you want to start seeing price firm up if price got that heavy. Okay, so right, we've come back down, right? When we got there, where's that right there? That's right there at equilibrium. What happened over here as we was going up? We started consolidating right there. So that lets you know, right? This right here, we can probably see, right, a little bit of engineering of liquidity. Right? What have we been seeing for a long time? Engineering of liquidity. Right? Where has price been very difficult? Right here. Where has price just been consolidating? Right here. What is that right there? That's right there around equilibrium, around fair value. The same thing it did the last time it was here. Right? Same thing it did the last time it was here. It was consolidating. It was slowly eking up. Right? But it was just, being a pain in the neck. All right, so now you got some sell side liquidity over there, right? And you have your equilibrium there. And we come down to our daily time frame, right? This is a discount PD array that we borrowed from the continuous contract with the continuous contract price levels. We came down, wick below it. Remember we said we traded down into that breaker that was inside that mitigation block, right? Let's go over there. Let's just go ahead and put, since we're not tracking that, let's just go ahead and track that now so you can get a good understanding of what I'm saying in real time. All right, so we'll come over here and we're going to come back here. This is the breaker right there. This is the breaker that's inside the mitigation block, right? For those who can't see it, we go up, right? Make a high, right? We're taking out liquidity, right? We come back down, right? Make a low that's higher than that, right? And then we trade back up and make a high, right? So that's your mitigation block, right? High, you got a low here, right? Make a high, make a higher low, then a higher high. That's your mitigation block. Inside this mitigation block, we come up, we got this low here, right? We come up, right? We trade down there, right? We're making a lower low. You say, Tim, we're not trading below that, but yeah, we're trading below all this liquidity here. So we're making a lower low there, right? And then we got this, and plus there's a low inside there too. So now this is your bullish breaker right there, right? So we're just gonna take the last up close candle here of this bullish breaker. All right, let's just go here, right? Bullish breaker there. Then we're gonna copy that, open this up, click over here, then we're gonna come here and paste it in, right? See where it pasted in there, and then we're gonna come here, right? Open that up, come back over there, right? So we get a top price 23,803.75, right? Top price 23,803.75, right? Come back over here. Our low price is 23,487.50. Come over here, 23,487.50, right? Boop. Now that's our bullish breaker that we borrowed from the continuous contract with B adjust off. I still got the settlement on. I could have checked that to see if we got in. Oh no, I'm doing a breaker, so I ain't worried about the volume imbalances. But you would turn these on and off if you was looking at like volume imbalances or suspension blocks, right? You would turn it on and off. But I'm looking at a breaker, so I ain't worrying about that. Then I come back over here, paste it in with the prices. Then as you see there, right, we came down to that mitigation block slash breaker, right? And then we came back up and closed above consequent encroachment of that daily fair value gap. But we closed well above it, but we came down, right? We opened up respecting consequent encroachment, dropped down into the breaker, rallied up and closed back above consequent encroachment of that volume imbalance that was borrowed from the other continuous contract. And then we opened up the next day here and we had an indecision inside day candle, right? Indecision inside day candle. Then yesterday, well, today's trading, which is yesterday's price action, another indecision inside day candle. It's a little bit bigger, a little bit more bearish, but it's still an inside day indecision candle because you're not attacking any liquidity to the upside or the downside, then attack any liquidity to the upside or downside. So, and where is this happening? This is happening right there in the middle of the road, right? Remember, that's the middle, that's right there at equilibrium or fair value of our overall dealing range, right? So we're still to hit, learn, and share. You want to get outside of this range. We want to get outside the range too, but we right there. We are still in the middle of the road. We still in the middle of the road, man. I know we spent a lot of time looking at this stuff on a daily time frame. We didn't really talk about what price did, but we'll just look at it real quick for our daily time frame. We opened up. Let's put our weekly our new week opening gap on there. All right, so we opened up here, right? This is what we opened up on Monday. We talked about we gapped down just above consequent encroachment, dropped down into the breaker, nested inside that mitigation block. Then we rallied back up and we came all the way back up, traded into this bearish order block right here. Right? Got premium sensitivity at that bearish order block, and then we closed above consequent encroachment of that volume imbalance that we borrowed from the continuous contract. Okay, then we opened up here, right? Wick back and forth, still, right? If we turn settlement on at 4 o'clock, we closed above mean threshold of that down close candle, right? And we're looking at the down close candle there. We closed above mean threshold on a down close candle at the settlement, but then by the time we closed at 5 o'clock, we had traded back down below mean threshold. Then we opened up today and we had another inside day, but we closed back above mean threshold of that down close candle, right? Even with the settlement on, right? So we immediately got back above down mean threshold of that candle, and at the same time respecting mean threshold of the next down close candle that we created, right? So we're down here in a discount, at a discount anticipatory reactionary point, and we're still showing respect for bullish order flow, right? While we're in this slow trickle of a sale program, we've just been slowly trickling down, very slowly, right? And it's not blasting off, it's not just dropping, right? We've made it down to the discount of our move, and we've moved back slight premium, but you know, for all intensive purposes, we're right there at fair value. All right, so on the higher time frame, meaning the daily time frame, right, we still don't have any clear indication of what price wants to do. Only thing we can see is, right, if we look at our weekly dinner range from last week, right, we turn our weekly low on, right, we can see that this is our weekly range based off of last week. We can see that we extended our range down, right? And then we traded back up into a premium PD array and got premium sensitivity, and now we're just consolidating again, right? So from the highest high to the right, this was the lowest low of the weekly range. We extended it down when we opened up, and then we traded back up into a premium, right, and traded into this bearish order block. If I said bullish order block last time, I apologize, but this right here is the bearish order block. Failed to get to mean threshold of the overall order block, right? The last up close candle, right, we traded up into the wick, right? We failed to get to consequent encroachment of that wick. So healthy respect for the bearish order block, drop back down, right? And now we're just consolidating. Okay, so in the sale program, right, the sale program is not invalidated. We're just showing respect for bullish order flow. Just like we said, we keep closing back above the mean threshold of the down close candles, right? And really heavy price action, right? You don't want to see price closing back above mean threshold of down close candles, right? When you're in a sale program, you want to see down close candles, right, be disrespected, meaning you're closing below mean threshold, right? Just like you want to be closing below mean threshold of up close candles, because you want price to stay heavy. But every time we create consecutive down close candles, we eke back above mean threshold of that last down close candle. Create a down close candle, eke back above mean threshold of that single down close candle, right? So it's respecting bullish order flow, but still trickling down. So in the sense of last week, right, we expanded down, right? Created the range, extended the range, retraced back to a premium PD array, and then started to move down, but right, respecting this up close candle, as far as not trading back below mean threshold of it, right? And if you are in a sell program, you want to get back below mean threshold of it, right? You want to get back below mean threshold of that, because you want that to act as resistance, but you're failing to get back below it, right? You're failing to get back below it, and we're just sitting here consolidating inside of this discount PD array there. Now let's look at what we're doing inside the discount PD array on a daily time frame. Like we said, at the New York close, right, on this day we closed above consequent encroachment. So this day, right, at the New York close and the futures close on the 23rd, we closed above consequent encroachment, right? On the 24th, at the New York close, we closed above consequent encroachment, but by the time futures closed, we closed outside, back down to the new week opening gap, right? Came all the way back down to where we closed at for the futures close on that Friday, right? Right, came all the way back down to there. Right, came all the way back down to that Friday close on the futures close, not the settlement close, right? Then we why is this over there? This is in the wrong place. I just noticed that that's in the wrong place. This gap from today. This gap from today, that's marked. Oh, I marked it with the settlement. I marked it with the settlement on. I mean, I marked it. Yeah, I marked it with the settlement. Oh, okay, that's settlement on. Okay, all right, that's right. That's right. I had my settlement turned off. I had my settlement turned on. That's why that was all the way down there, right? But that's correct, right? Because the new day opening gap is from the futures close to the futures open. Right, that's the new day open, from the futures close to the futures. So you want the settlement to be off when you're marking that right there. All right. So, and then so looking at our futures close there, right, above consequent encroachment, right, we traded back down, right, and we closed just below consequent encroachment, and then now today we've opened up and traded below that low, right, and we also traded up into today's new day opening gap, traded down below that low. I don't know if we went up or down first because I haven't looked at that, but we're still inside the range of this PD array that we borrowed from there, right there around equilibrium. So Tim, what you saying? We saying on the higher time frame, we still don't know what we gonna do, right? We still win, lose, or draw. You got to love this trading. You gotta love it, man. You got to have a love for it. Anybody got any questions about the higher time frame and or what PD arrays we looking at and why we looking at them before we drop down to intraday? Oh, and then another thing I noticed, right? I noticed this today. You see how we having these inside days, like this inside day. This was an inside day. So we having these inside days. Not only are we having inside days, right? Look where we opening it. If I turn on the 24th, right? Look where we opening and closing at. Y'all see right here is today's new day opening gap right there. If I turn on Tuesday's new day opening gap, it's pretty much the exact same place. So not only are we like having inside days, for the last 2 days we've been closing and opening in the exact same area, because when I turn the new day opening gaps on and off, they overlap each other right there. I don't know if y'all could tell. If I make it a little bit bigger for y'all, like this right here, right, then turn it on and off, right, they're overlapping each other. So it's like we're right there in that same place, just, you know what I'm saying, overlapping. And then today we opened up a little bit lower, right? We opened up a little bit lower, but we still right there around consequent encroachment of that volume, that daily volume imbalance. All right. I don't see nothing in the chat. I don't hear nobody saying nothing. So we're gonna go ahead and drop down into our intraday time frame and look at what price had a going zone. All right. So looking at a 60-minute chart, as we said, we opened up here. We had a huge gap down on Monday, right? We traded down into the daily fair value gap from August 2025, August 12th, 2025. Also, the bullish breaker that we said was nested inside of a bullish mitigation block had the massive rally, came up there, got the bullish breaking market structure on the intraday time frame. Right, once we got the bullish breaking market structure, remember what we said about the inefficiencies as opposed to the fair value gaps, right? Remember we said that when price is moving, you want to look for the areas that are inefficiently, that's not efficiently delivered, or, you know what I'm saying, not efficiently delivered, right? And we said as price was coming down here, right, this area here, right, we had officially delivered because we had sell side delivery, buy side delivery, right? And then we started to trade outside of that area there, retrace back up to a premium of this range here, traded outside of that area, right, traded back up, right, consolidated there a little bit, traded down. And once we trade, like, this is just a continuous move down, right? We got a sell side imbalance, but as we're going down, we're going down in that fashion. But once we got here, right, we got all of this right here is we got sell side and buy side delivery from top to bottom. Sell side and buy side delivery from top to bottom there. Sell side and buy side delivery from top to bottom there. Sell side and buy side delivery from top to bottom there. And then we cut through this entire area like a knife going through butter. So where's the area that are lacking or got some kind of inefficiency of delivery in it, right? Well, we said from here up, right? So from here up, right, after we cut through it, now we're offering the buy side delivery over this whole full sweep, right? We were stair stepping down, but once we came here, we offered the buy side delivery in this one full sweep. So then when price started coming back down, right, where did it stop at? It stopped right here on top of this balanced price range there, where we offered buy side, sell side from top to bottom, buy side, sell side from top to bottom, buy side, sell side from top to bottom. So all of this balanced price range right there, when we talked about it, we said if price pulled back into a discount of this huge range, right, we want to see this area right here firm up and offer support, right? And what has price done? Price has come down to that area right there, firmed up, and it's offering support, right? Traded down into that SIBI there. We have this, there's weird price action going on right there, but we traded down into the, we just say this balanced price range right here, right? So if you look here, right, we got a balanced price range right there, right? Zoom in on it, right? Come down just below consequent encroachment of that balanced price range right there, right? Rally back up, come back down, kiss it right here, institutional order flow entry drill into it, right? Then we rally up, right? And now we're in this big holding pattern that's right there inside this daily volume imbalance that we borrowed from the continuous chart, right? We came down, right, into the order block, right? Now that we're below consequent encroachment of that volume imbalance, if you look here, we was above consequent encroachment for the most part, working this BISI right there, right? Was working this BISI right here. If we include the volume imbalance there, right? That's the BISI that was working there, right? Coming back and forth, traded up, created relative equal highs, right? Coming down, still working that BISI, staying respecting consequent encroachment. We wick down into the order block, right? Trade back up, still staying above consequent encroachment of that BISI, right? Then we get down below consequent encroachment of that BISI, right? Come down, take out that low, right? This is coming into today's price action. Let's chop that off because we just want to look at where we stopped at, right? So that's what we stopped at on today's price action. Well, yesterday, but y'all know what I'm saying. That's what we stopped at on today's price action there, right? Coming down into the order block and closing right there around consequent encroachment of that BISI right there, right? So price is, not only are we here at equilibrium, right? Came down right around equilibrium, respecting the balanced price range of all of this, respecting that balanced price range, right? As far as when we came down there, and then respecting our new week opening gap, right? Right there at equilibrium. And then we come back up to another level of fair value. What is that? Consequent encroachment of our higher time frame PD array, right? And we're just there engineering liquidity, right? Not giving you any clue as to if you want to blast off or drop, right? We're still in a sell program, right? We're still in the sell program, but it's not giving us any indication of what it wants to do, right? So here we are, our overall range from last week, right? This is our latest expansion from our sale program that we're inside right now, right? We came back up to a premium, got a bullish break in market structure, traded up into a premium. So on the intraday time frame here, you're getting a bullish break in market structure, but not but on that, you come back to a premium, right? You come back to a premium after extending your sale program, but right, these premium PD arrays, after sweeping this liquidity, is not taking us down to extend the dealing range. All right, remember we said when you're looking at, right, PD arrays, right, when you're looking at PD arrays in a discount and a premium, they have a job to do. Their job is to act as resistance or support, and then their second job is to send price to a destination in accordance with that buy or sell program. So in accordance with this sell program, right, price has come down, right, extended the sell program, traded back up, extended the sell program, traded back up, but now it's not extending the sale program, right? We're sitting here consolidating, right, respecting the balanced price range and respecting discount PD arrays, right? Does that mean we're going to take off? No. Does that mean we're going to tank? No. That just means that we're sitting at an area of accumulation, in the sense of accumulating liquidity, right? And you would just look for signatures to say, hey, what are we doing, right? Because coming here, right, like we said, once we took out that low, price should have continued down, right? But it's not. So since it don't want to continue down, if we come back up and take out this high, right, then we could say this right here was our smart money reversal, and this right here, right, we can look at this here as, you can, since we're accumulating there, we'll just look at it as first stage accumulation, right? Since we're over here accumulating, if we come back up and take out that high, right, smart money reversal, we take out that high, first stage accumulation, and then you will be looking for us to deliver above that high right there to complete that small market maker buy model. Okay, but if we don't come up and take out this high, right, and we start to break down, you will want to see all of these PD arrays we've been using as support here to act as resistance to continue to push us down inside this sale program. All right, we have 1, 2, 3, 4 more days of trading left in this month, right? We talked about this before. We're coming to the end of a month, right? Are we going to, let's jump up to the monthly chart real quick, right? How are we going to end this month, right? Looking at this month in the sense of the power of 3. All right, so in the sense of the power of 3, we opened the month here, opened the month there, we traded up and we made a high up to that point, right? We traded down, we made a low up to that point, and now we're coming off the low, right? And let's just say if we just close here in the same spot as we are at the end of the month, right? And that would give us our monthly candle right there by opening, make a high, make a low, and then closing off of the low, right, going into the end of the month. Or will we just continue to bleed down and close even lower, right? Most of the time when the candle get ready to come to a close, we get some type of pullback off of the low or the high. Not saying it has to, but we haven't had any super bearish momentum where it's just flushing that would give you the indication of, oh yeah, we're just gonna flush and close down here right on the low or below the low, right? We've been down here respecting discount PD arrays, showing the sign that it wants to, you know, give some type of retracement and close up off of that low to finish out that monthly candle. All right, but for right now, we're just stuck in this range where you just want to play the intraday time frames in accordance to the higher time frame PD arrays, like this daily volume imbalance, your new week opening gap, this balanced price range. This is an intraday time PD array, but where is that? That's down here in the discount of our move, right? Right where we wanted. We talked about this when price was over here. We said we do not want to see price rally off of this SIBI from 9 a.m. on Friday or this SIBI from 5 a.m. on Friday. We said we don't want to see price rally from there because that's not giving price an opportunity to come back into a discount before the rally, right? And so those areas, right, gave way to let price come down to a discount. Now it's made it back down into a discount of the range, and now it's showing a healthy respect for our discount PD arrays, even though we're still sitting here consolidating and engineering liquidity. All right, y'all got anything for me? Y'all do me a favor, man, hit a like for the algorithm, and if you ain't subscribed to the channel, you know what I'm gonna say, do. Push the button. Anybody got I appreciate that, Will. I do love it, man. I love this stuff, man. I do love it. I love this. I love this trading stuff. This thing right here. This has the power to I ain't hit you. I ain't hit you with the here learn the show, like what a explosion there. You ain't hit with the explosion. I don't feel like I'm really cooking tonight. If I felt like I was cooking, y'all know I hit you with the bums and I hit you with the let them cook. If I was really cooking, we just kind of like, we're just looking at price, man. We ain't doing that. We ain't doing that too big. What's going on, J Trades? JT Trade. Oh no, that's J Trades. Yeah, what's going on, J Trades? All right, man. Y'all ready to jump down and look at the intraday time frame? I will get a closer look at the New York. Right, get a closer look at the new man. What is going on with my charts? I got a million. Oh, it's just all the stuff we was talking about. The different areas, borrowing stuff from levels and all that, and then now we can see that the stuff that I had marked out from today when we did our tape reading session. When we did our tape reading session today, we can see what price did, man. Let's turn on the indicator so that we can just focus on the New York session. All right. So just focusing on the New York session. Hey, what's my pre-market high? What's my pre-market? Did I delete something? Yeah, look like I deleted something. Come my pre-market high gone. Something got deleted. Let me mark this out here. Yeah, the pre-market high got deleted for some reason. All right, that's the pre-market high. That right there is the regular trading hour SIBI that we were looking at. If you go over here and turn see, you can see it there. You know what I'm saying? I didn't have to put regular trading now, but I put regular trading now because it's a SIBI that's there. When I turn my regular trading hours on, right, that's the predominant premium PD array that's there based off the regular trading hour time frame, right? Looking at our regular trading hour time frame, that's the premium PD array that's sitting there that we have not traded back up to. Okay, so that's why I had that marked out, and price was in the range. So looking at everything that PD arrays that price is near, right? Then we had some buy side liquidity, some afternoon. This is our afternoon high from yesterday afternoon, kill zone high, right? We marked that out because we were above it in price. So when you're trading down, you want to reference old lows and old highs. If an old high is below you, that's a discount PD array. That's, below price, right? And then we had, this isn't the afternoon low. That's why I got it marked out as a dash. I look at that as internal liquidity because the afternoon low is down here. That's the afternoon kill zone low that's down here, right? I didn't mark that out because, it's right down there by the morning low from yesterday. So I didn't want all them lines on my chart say, hey, if price got heavy, then I'll start focusing on that. But for right now, the afternoon internal liquidity is there if price got heavy. All right. And so that's the regular trading hour. I didn't mark out the morning high because it was right there next to the pre-market sell side. Didn't want to overload the chart with a bunch of lines because we already had some liquidity there that we're eyeballing. And the the morning high, is right there, right? But if you really just wanted all your levels to be there, right, you could just mark out that morning high right there, and just mark it as like a regular trading hour AM, right? Regular trading hour AM. And then I would make that a solid line because it's not internal liquidity. So if you just want to mark that out, you can mark it out like that, right? And then, but I didn't have that marked out, so I'm not gonna worry about it. All right, but you want to identify your liquidity pools. Okay, so now let's look at price. We got pre-market all the way over to the end of day. All right, let's knock off this other stuff here. All right, so pre-market to the end of day. All right, this is our 9 a.m. 9:30 open here. All right, that's our 9:30 open. Okay. All right, so that's our 9:30 open. Looking at the 15-minute chart, right? Just look like a whole bunch of back and forth consolidation, right? So we're gonna drop down in time and look at a 1-minute chart for this range, right? So we can get a better feel for the detail of everything that went on throughout the day. All right, so coming in at pre-market, right? Coming in at pre-market here, you see we had already traded down into the new day opening gap, right? Traded up, got a bullish break in market structure, came down, failed to take out the low, right? Going into pre-market, we rallied up, took out the high again, right? Then we dropped down, right? Manipulating out all of this trend line liquidity here, traded all the way back down into the balanced price range and the inversion fair value gap over there. This is your inversion fair value gap here. That's the first SIBI that was created, right, on this expansion down right there. We traded down into that inversion fair value gap right there, right, just below consequent encroachment into the BISI, right? This is your balanced price range for that area right there is where the BISI and the SIBI, right, overlap each other. That's your balanced price range there. You see we traded down just about to the low of that, came back down, kissed it one more time, and then rallied back up, right? Once we rallied up, we came up and set our pre-market high. If you notice, that pre-market high is right there at that regular trading hour SIBI from the 23rd at 11:30 a.m. That's a 15-minute fair value gap, right? Just shy of yesterday's high, right? That's the previous day's high right there. Okay, so we got an institutional order flow entry drill on that SIBI, right? The SIBI that we were annotating as a premium PD array, okay? Based off the fact that that's that PD array from the previous New York, well, the New York session from the 23rd, which was two days ago. First time trading back up to it, right? So we coming back up to it now. Institutional order flow entry drill. Off of that, we drop down, right? Get a bearish break in market structure, sweeping out all this liquidity, right? Trading down to the new day opening gap, right? Pull back up a little bit, drop down, take out that low and trade it below midnight, right? And set the pre-market sell side, right? So that's the lowest low that we created before 9:30. That's the highest high we created before 9:30. All right, so now coming into 9:30, right? This is our dealing range based off of an algorithmic dispensation in time, right? What does that mean? That means if price is not just leaving this area, right, you can mark out this area and put it either in the 4th grade or the 8th grade and utilize this area as your dealing range to make your trading decisions, right? So putting it in the 4th grade, right, these are your quadrant levels, right? And just like always, if you have an algorithmic dispensation of time mapped out, anchored with a Fibonacci tool, what is going to happen at these bus stops. All right, ask yourself, what's going to be created at these bus stops? Right, it's not an accident that these PD arrays are created at these bus stops. Even this 5-minute one right here. Right, you got a 5-minute one there that we have marked out. Where is that? That's at a bus stop. This is the first presentation. This is your first presentation. Where is that at? At a bus stop. Right, and then if you fine tune it even more, I mean, we said if it's in a tighter range, even if it's in a big range, but especially if it's in a tighter range, you know what I'm saying, tight range, big range, whatever, right? If you want to fine tune the accuracy, right, then you go and put it in the 8th grade, right? So when you put it in the 8th grade, right, now you look at the 8th grade, oh my goodness, it didn't go to somewhat ambiguous up there when it stopped right there, had that order block right there at that octant level. The first presentation is right there at that quadrant / octant level, right? Oh, it didn't stop somewhat ambiguous when it came up here, made this high, traded back down, it came up and swept that high right there at that octant level, right? It didn't like just randomly stop at places, right? And why is that? Right, this right here, like we said, was your highest high and lowest low. Let me take off the high and low so you can see the pre-market high and low. Right, so if I come here and take off the top and bottom, right, remember we said this right here was your highest high and lowest low in the pre-market prior to our 9:30 open, right? So when we got to our 9:30 open, right, what did we do? We took off payout, took out buy side liquidity, right? Came straight up, took out buy side liquidity, right? Now that we've taken out buy side liquidity, we came up to a inversion fair value gap, that first BISI before rallying up, and right, this bearish propulsion block right there, right? You got a bearish propulsion block because this right here is your bearish order block, right? We're going up, then we get our change of state of delivery. That's your order block. Then that order block there is inside that order block there. We get that displacement away, come up into that bearish propulsion block inside this bearish order block, all inside the inversion fair value gap, inside the SIBI, all resting right there at that upper octant level. And then we go down, babe, yo, sweep, end of range, over, all the way down, right, and engage the sell side liquidity, right? But on the way down to engage in the sell side liquidity, right, we going up and we create our first presentation, right, as a bullish fair value gap going up, right? Where is this bullish fair value gap created inside our dealing range that we're working inside? Where is it created? Inside this newly created dealing range right here. It's in the premium. So you got a bullish fair value gap created in the premium at a premium PD array. Are you looking to buy off of that bullish fair value gap? No, you're not. You're looking for that to become an inversion, right? So we come down, close below consequent encroachment. We rally back up here. We rally back up into the rejection block. Once we get into the rejection block, again, right there, what is this right here? Just a lot of high resistance, right? A lot of manipulation, right? Because once we came down here and closed below consequent encroachment of that first presentation, there was no reason to go back above that octant level / quadrant level outside of just manipulation. There's no imbalances up here, right? So we come up here into the rejection block, right? Then we come down and create our inversion, right? Got our inversion fair value gap. Not only is it the first presentation, right, it's the first BISI, right, leaving this area right here. So that's a high probability inversion fair value gap. Boom, got your inversion fair value gap there, create a SIBI there, and then we displace away. Look like we got a very small SIBI right there, right? very small SIBI there. So now we got a breakaway gap and a really small SIBI right there. Okay, then what do? Right, we form a bearish order block, get below the bearish order block, don't come back to the breakaway gap, don't come back to that tiny little fair value gap, create an order block, drop down. Right, what do we have right here? Right, this is our 9:30 5-minute BISI that was created. That's the BISI that was created at 9:30. Right, when we came right here, let's go to a 5-minute chart real quick. Right, so going to a 5-minute chart right here. Right, so we come down here at 9:40, we close right there at consequent encroachment. Then we come here, right, at 9:45, and we create an inversion. Right, we create an inversion at 9:45 when that 9:45 candle closed. Right, over here when it's 9:35 candle close, we closed just below consequent encroachment, showing weakness. Right, so we closed just below consequent encroachment, showing weakness. Right, and when we close below consequent encroachment, showing weakness, that was this candle right here. Right, our next candle open up. Right, it's an up close candle. Then we immediately come down and create a bearish order block. Right, so the 5-minute candle has just shown weakness, and now the 1-minute candle is starting to respect bearish order flow. Right, so we trade back up. Right, create an up close candle, come down. Right, got to change the stay delivery based off the up close candle, trade back up into it, respect it, trade back up into it again right here on this 9:48 candle. Right, trade above that high, respect it. Okay, then we create this suspension block right there when we drop down there. Right, and that's when that 5-minute candle close, and now that's an inversion. Right, so that's inversion now, but here we're in like a low resistance move now. Right, now we're in a low resistance move, so we're not doing a lot of retracing. Right, we're coming up, respect that PD array. Right, get down right below that octant level right there. Right, trade down to the lower quadrant. Okay, drop down. Right, drop all the way down past the lower octant. Right, stop right there at the low, at the sell side liquidity. So it's just a from here. Right, you're not getting a lot of opportunity to participate. Price is just starting to spool. Right, down to the liquidity. Let's look and see why price is starting to spool. Right, we come down here. Right, all of this buy side and sell side delivery. Right, what happens right here? We leave that area. So now all of this right here is a balanced price range. If you're above a balanced price range and you're bullish, this should act as support. If sell side is your target, if buy side is your target, this should act as support. Right, we come down, hit it, push up. Right, this BISI, right, this mitigation block slash breaker slash whatever you want it to be inside this kajumble doesn't send us up above that high or toward that. We come down, fail to get above the high, and then break back down. Right, once we break back down, price is now just spooling. Why is it just spooling? Because we're cutting through this area like butter. Right, if you're above a balanced price range and you're bearish, you should cut through it like butter. So we cut through that area like butter there. Right, we got our breakaway gap right there, we got our fair value gap right there. Right, we come in, right, trade up to it, poke below the low, trade back up to it one more time. Right there, going into the macro time, we drop down into the liquidity, right, into that old high from regular trading hours. Remember that buy side liquidity from regular trading hours. Right, this right here was our overnight low. Right, so we trade down close to the overnight low right, and don't take it. So we traded down to the overnight low there, didn't take it. Traded down to the overnight low there, didn't take it, right? Engineering that sell side liquidity down there, right? We rally all the way back up, mind you, right? We've engineered sell side liquidity here once, twice, right? So now what do we have here? A triple bottom, right? Retail is looking at this as heavy support, right? So we rally all the way back up to this upper octant level, right? And where do we go when we rally all the way back up there? All the way back up there to our first presentation, fair value gap, and we sit there and we bounce in between that first presentation and that 5-minute BISI that we have marked out from 9:30, right? So we just bounce in between those for a long time, just engineering a lot of liquidity, right? Trade up into that upper octant, into that rejection block, right? While we're doing all this bouncing around inside here, inside this first presentation, right? Well, we also bouncing around inside that, remember that inversion fair value gap we talked about here. Remember that, not inversion fair value gap, but that SIBI that we talked about here, and that inversion fair value gap that we talked about over there, right back up there, right? And PD arrays do not go stale, right? We're right up there in that same area, right? Acting as resistance, right? Still acting as resistance. Why? Because we've engineered all of this sell side liquidity down there, right? And then once we do that right there, and we come over here, going into this macro time right here, the 10:50 to 11:10 macro time, what happens? Price spools and runs down into that liquidity that we was engineering throughout the entire day. Why did it just spill down like that right there? Again, right, very efficiently delivered, right? And if you above a balanced price range, right, there's the balanced price range over there. If you're above it and you're bullish, it should support price. If you're above it and you bearish, it should cut through it, right? So we cut back through it again, trade down into the liquidity that was engineered throughout the night, 1, 2 times, and then rallied up, deep retracement, manipulation, boom, come back down and take out that low, right? And then you can see what price did for the rest of the day. We came back up, right? Now we've, from there to there, this is the highest high, and now this is the lowest low, right, for our New York session, right? That's the highest high, that's the lowest low, and where is price hanging out? Right there in the middle of the road, right? Price comes back up, just hangs out right there in the middle of the road. What's in the middle of the road? Our new day opening gap. What do we say price has been doing for the last couple of days? Opening and closing in that same area. Remember when we turned on those gaps, right, from Tuesday and Wednesday, right? Turned on Tuesday and Wednesday gap right there. And where is that? Right in the middle of the road. That's not an accident. The algorithm understands that because it made that high right there, and because it made that low right there, that right there was going to be the middle of the road, right where it's been opening and closing at. What's the opening price? That's the first agreed upon price for that session. That's the first place of fair value. What's the closing price? That's the last agreed upon price for that session, right? That's the last agreed upon price of fair value, right? Where is it hanging at? It's hanging in the middle of the range. That's fair value based off the highest price it was sold for and the lowest price it was sold for. That's right there at an area of fair value, right? If you anchor your Fibonacci tool to algorithmic highs and lows during specific dispensations in time, right, you can trade in the zone. Trade in the mess. Trade. You can see that. Do you want to be participating in this? No, you don't want to. But can you? Yes, you can. I'll do me a favor. Hit a like for the algorithm. And subscribe to the channel if you ain't subscribed. Do anybody got anything for me? I said I wasn't going to keep y'all long. We've been on here forever. We've been on here forever. Let me ask y'all a question, man. Do y'all be going back looking at the gems from the live stream when I be breaking them out like that? Do y'all be looking at the gems from the live stream? Or can I just stop putting in that extra work? Can I stop putting in that extra work, or do y'all be looking at them? Yeah, I know you've been MIA, Marco. All is well. Okay, life be life, and it do that. It do that. Keep working on them. No question. Always. Hey, man. That's all I got. Anybody got anything for me? Y'all see I'm letting Shady Grady grow out a little bit. I don't know how long I'm going to let it go. I just started letting it grow back out. I appreciate that. I appreciate that. I don't never know how to say that name. I see capital. Say I capital. Say, I don't know how to say that. It's SAAH capital. Say I capital. I don't never know how to say that name. But yeah, so tomorrow is, what's tomorrow? Thursday. All right, tomorrow's Thursday, so we ain't got nothing going on in the gang. Speaking of the gang, if y'all want to be a part of the gang, it's a link in the description below that says join the Discord. For all new members, it's $50 a month. OG gang, y'all already know y'all grandfathered in at whatever you pay, whatever you've been paying. We do monthly Q&As. We do tape reading on Wednesdays. We do price action analysis, pre-market analysis on Monday, Wednesday, and Fridays. And we be doing like pop-ups when I had a time. I ain't been doing pop-ups a lot lately because life been life. And y'all see I've been coming on late doing the price action recap. Stuff been going crazy. Shout out I'm just gonna say Capital because I don't know what that first part is. Shout out Capital. Say they're gonna have to rewind this. Yeah, and then for those who don't know, like when I do the price action recap, the next day I post videos. I post 3 videos. It'll be, the first one is like the higher time frame when we're looking at the daily chart. I do one-on-ones for like $150, but I don't advise people to like book one-on-ones for me. I think one-on-ones are like a waste of time. All right. I think one-on-ones are a waste of time. I feel like if you like, I go live just about every day, and you can pull up and ask your hard-hitting questions in the chat. I'll sit here and answer questions till the cows come home. You know what I'm saying? But to spend $150 to sit down and talk to me for an hour, I feel like that's a waste of your capital, right? I'm not saying don't do it, because I'll take the $150, but I feel like that's a waste of your capital, because in that hour we're not going to be able to get you to the point where you need to be, right? Because just like anything, right, if you want to get better at it, it's going to take work combined with mentorship, right? You got to put in the work, and then you have somebody there to mentor you, to help you along the way, and then push you. You know what I'm saying? Help push you to the limit, right? And offer you that confirmation when you need it, and offer you that correction when you need it, right? And you can't get all of that done inside just a 1 hour session, because when you come in there, you can't even hardly think about what you meant to ask. You're trying to go through your notes of what you wanted to ask, and then when you start talking about anything, especially trading, right, it's more than just a cut and dry answer. It's more than just, hey, just go do this and you will be okay, right? It's always what's the name? I have a trading strategy. The time and price seems interesting. Yeah. So if you ain't, let me ask you a question. Have you do you trade ICT concepts? All right. Do you trade ICT concepts? If you don't already trade ICT concepts, a one-on-one definitely is not what you need to do with me. Because if you don't trade ICT concepts, like you say, the time and price seems interesting. That's a long road to hoe. That's a long walk. Getting the understanding of how to use time and price, right? That's a long walk. We got people in the gang that's been in here with me for years, and some of them just now getting the aha moments, right? I mean, SMC is ICT concepts, but what's SMC out there in the world, right? That all of it is not what Michael teaches, right? SMC is just the and see, you said I'm familiar with ICT, but you said you trade SMC, so that's how I know, right? You've been led astray when it comes to ICT concepts, because ICT concepts is SMC, right? SMC is smart money concepts, right? Smart money concepts is the ICT like smart money concepts is his concepts, but people just call it ICT because his name is the inner circle trader. So people try to separate smart money concepts from ICT concepts, but they're the same thing. And the people who are teaching smart money concepts, right, they're not all teaching ICT, right? They're taking the name because the name has been made very popular, or they're teaching bits and pieces of it, right? The terminology is what have me stuff. I like it simple. Hey, we all like it simple, but when you're trying to learn, when you're trying to learn something, you have to understand it, and then you can simplify it for yourself, right? People tell me, oh man, I like the way you break down the ICT concepts. You make it simple, right? Me and Michael be saying the exact same thing. You know, I don't say nothing no different than him. You know what I'm saying? I don't say nothing no different than him. So it's like everybody like it simple. Everybody want it simple. Ain't nothing wrong with wanting simple, but you have to learn the concepts, and then you can make a simple strategy for you. This is what people get wrong about ICT concepts, right? They think that everything in ICT concepts are different concepts. It's not. There's only one smart money concepts. There's only one ICT concepts. There are many different facets inside of ICT concepts, but there's only one ICT concept. See, people think that Fair value gaps is an ICT concept. They think that breakers is an ICT concept. They think that liquidity sweeps is an ICT concept. They think, no, all of these things are part of the ICT concepts. It's like you can't cut it up and then try to just focus on this one little piece and then try to figure out, man, why am I getting it wrong so many times? Because you've taken away from the most important thing. You've taken the most important thing out of the concepts, which is time and price. Once you understand that time and price is the most important part, right? You're like 50% of the way there already. So you want to act when time meets price. And what people can't get through their head is that you got to learn how to cut through the candles to recognize, okay, what is the algorithm doing? I'm going into a new New York session. Am I trading anywhere near where the old New York session closed? Yes, I am. So if I'm trading anywhere near where the old New York session closed, right, I got to be able to be like Ant-Man and look through all of these Globex candles and see the PD arrays and the liquidity that was left in that previous New York session. Why? Because the algorithm is going to refer back to that previous session. I'm in a new New York session. I'm looking at the old New York session and I'm sweeping that liquidity. I'm hitting them imbalances. Well, what if we're not trading next to that old New York session? Okay, it's going to look back to the previous session that was there. Is it a London session? Is it a Asian session? Is it a New York morning when you're in a New York afternoon? It's looking back to that previous session. But if it's in the level of the previous version of itself, you want to pay attention to them levels. Why? Because time is meeting price. You're in a kill zone, so that's your time, and your price is the price from the old version of itself, that old New York session, or if you're not in that range, that previous session that you just came out of, right? So, but you got to understand all of the concepts before you can go in and try to make a simplified model that you can use. But I don't know why, but when it comes to trading, everybody want it fast. Everybody want it now. Everybody just wants something that they can copy and paste. All right? It takes time, period. Facts. If you do it, it's wrong. Yep. If you did it wrong, even when you learn them, yep, you ain't gonna know how to make money. Even when you learn them, you got to, yep. It ain't nothing random. Ain't nothing random about it. Time meet price. Y'all can see. Y'all can see. We can go through and talk about it. You see what's happening, right? You see what's happening. It ain't buying pressure. It ain't selling pressure. It ain't the hedge funds, right? Ain't the hedge funds. Hey man, I'm making some money. Almost past my first prop account. I've been paying attention to time, trying to implement it into my strategy. Yeah. You want to understand the concepts. You want to understand the concepts. You want to understand the PD array matrix, right? Once you understand the PD array matrix, which is right. You want to understand, right, the PD array matrix. Why do you want to understand the PD array matrix? You want to understand the PD array matrix because you need to know what the clues are, right? What are the clues that the algorithm is leaving behind, right? So right? You have your PD array matrix. You want to understand what are the clues that the algorithm is leaving behind, all right? Tim, you just got the same thing listed. Why? Because they're the same. That's what the PD stand for. They're premium and discount arrays, right? PD arrays, premium and discount arrays, right? So it's clues that the algorithm leave behind as price is moving, right? If you're bearish, right, you're looking for reasons to sell off of a PD array in the premium, right? This is your range, your highest high, your lowest low. The 50% is your equilibrium. If you're bearish, you're looking for reasons to sell off of a PD array, right? Everybody make the mistake of trying to look for all of them. You're looking for a PD array to sell off of in the premium. If you're bullish, you're looking for a PD array to buy off of in the discount, right? And then, right, that PD array is going to be able to tell you everything you need to know about your trade. It's going to be able to tell you your entry price. It's going to be able to tell you your stop loss price. It's going to be able to tell you, and looking at the price action, then you'll understand what your target is based off of other PD arrays that's in the range, right? So, but that PD array is going to be able to tell you based off this PD array, this is my entry price. This is where I need to put my stop. If price hits my stop here, I am wrong. You're not guessing. You're looking at the price action to say, because price did this, we should not come back to this point right here. If we come back to this point here, I missed something, right? Or I just got manipulated out, right? You're going to lose. The manual intervention comes in and you get manipulated out. We can't do nothing about it. But based off these PD arrays, you know exactly where your entry stop loss should go, right? Based off of the PD array you're entering in on, right? Then you want to understand time, right? You want to understand inside of a day, you have things called sessions. Inside of sessions, you have things called kill zones, macro windows, and opening ranges, right? All of these are dispensations in time, right? You can use a day as your dealing range. That's a dispensation in time. So you can trade within the range of a day. You can use your session as your dealing range. That's a dispensation in time. You can fractalize everything and trade within the highest high and lowest low of this session. You can use kill zones as your dealing range. You can use macro times. You can use opening ranges. You can use these as your dealing range and trade within these dispensations of time. Why? Because the algorithm understands that these are algorithmic times and it knows the highest high and lowest low inside these ranges of time. And not only can you use them like that, you can use them to understand at the macro times, I'm anticipating price to do something. During the opening ranges, the algorithm is establishing liquidity pools that it will sweep or target based off of if it's in a bearish or bullish order flow, right? You can use these ranges to understand what price is going to do. And when you're inside these kill zones, this is the highest time of probability for the ICT concepts to work. So this is when you're looking for it to happen during these kill zones. Then you have certain things to look for during these kill zones. So when time meets price, so if you're going into a macro window, if you're trading at the level of a previous macro time, right? You want to be paying attention to those PD arrays that was created during that macro time. Why? Because you're going into a new version of something else. So if you're trading in the same price range of that previous macro time during a macro time, you want to be paying attention to those PD arrays that was created during that macro time. If you're going into a new session, you want to be looking at the PD arrays that was created in previous sessions or a previous version of that same session if you're trading within those price levels, right? Because you want time to meet price. So at this time, if it comes back to this price, meaning that rejection block, meaning that order block, that whatever, then it's time to strike if your setup has played out. All right. And you can't see right here. I can see right there, right? You can't say my risk is 1 to 3. You can't say that. Now, I ain't gonna say you can't say that. You can say my risk is 1 to 3. You can say that. But if you were trading smart money concepts like you said you do, right? Then you will understand your risk to reward is gonna be different on every trade that you take, because your risk to reward is going to be based off of the price action. You're not going to have a fixed 1 to 3 risk to reward every time you take a trade. Right? Yep. You're not going to have a fixed 1 to 3 risk to reward every time you take a trade, because when you take a trade, right, your PD array is going to tell you where your risk is. Right, your PD array is going to tell you where your risk is. So if you come in here, right, for example, we're just going to pick something here, right? You come in here and you say, I'm buying off of this discount fair value gap right here. Right? You say, I'm buying off of this discount fair value gap. Right? That's fair value gap. I'm buying off this discount. When price trades down, I'm buying off that discount fair value gap, right? So if you're buying off of a fair value gap, you already know, right? If you're buying at first touch or consequent encroachment, right? However you want to enter it, right? The way Michael teaches it, right? Your mandatory stop is below, for a bullish fair value gap, your mandatory stop is below the low of candle 1. In this case, candle 1 is the swing low. I like to say your safe stop is below the swing low of the price leg that you're in, right? But in this case, candle 1 low and the safe stop is the same thing, right? So you get in on a fair value gap, your mandatory stop is below candle 1 low, right? So then if you're looking at the price action, right? If you're looking at the price action, if you're getting in here, right? That right there is your low hanging fruit, right? That right there is a target objective, and your ultimate target is the swing high, in this case at the opposite of the move at these equal highs right here. So if you're looking at that as just an entry off of your first touch, right, your mandatory stop is right there, and then your target, right, let's just say you say this is my target, but I'm gonna go safe and just trade to there, right? So that trade right there, just based off of what the PD array is showing, right? The PD array you're entering on, based off that, this right here is a 3.42 risk to reward, right? You can't go in and say, oh, I just got to fix 1 to 3. That's not how smart money concepts, that's not how ICT concepts work, right? You're not going to have a fixed risk to reward every trade that you go into, right? That's a fallacy that people have, you know, pumped into our head as far as retail traders, right? Pumped into our head as far as retail traders. What you got to figure out is, can I absorb the amount of risk that it takes for this trade right here, right? And if I can't absorb this amount of risk on a mini, then I have to drop down to micros to figure out that how much I can put on to take this trade, right? So in this case right here, that's a 58 point stop loss right there, right? Can you absorb 58 points of a mini? All right. I know I can't. 58 times 20. right? That $1,100, $1,160, right? Now for a micro, that's only $116, right? So instead of trading a mini for this setup right here, right? You will say, okay, this is my setup. This is what I'm taking. Now I know I can't trade this on a mini, so I'm just gonna come here and trade it with one micro. And this is not saying that you're supposed to be doing it, but I just picked this as an example, right? And that's how you decide, okay, can I afford to take this trade? It's not based off of, oh, I always risk 1 to 3. I'm always risking Tim can afford it. I can't. No, sir. I am not putting on no $1,000 in risk on a trade. What is you high or what? What is you smoking? The most you gonna see me risk on a trade is probably $300. If I got to risk more than $300 on a trade, that ain't my trade. You feel me? Preservation of capital over here, player. Preservation of capital over everything. You feel me? All right, man. So yeah, what's the name? Capital. Just keep tapping in. Keep tapping in. I was trying to look at the thing. I was trying to look at you. What's the name? It's too small. I can't tell if that's a female or a dude. It's too little. I can't see the person. Female. It's a female. I just went to the channel. It's a female. Look like she got some braids up like this right here or something. Yeah, just keep tapping in. Keep tapping in. You know what I'm saying? Pull up, ask questions. You know, go through the when I start swing trading, my risk will be different. Runners. Yeah, runners cool. I only risk 3 points for the MES and 15 points for the MES. See, that ain't what you want to do. You don't want to be on no fixed. I only risk 3 points, right? You're not trading the price action when you say I'm only risking 3 points. You're not trading the price action. You're doing more like momentum style trading, right? You're not trading smart money concepts when you say, oh, I'm only risking 3 points. I'm only risking 15 points. You know what I'm saying? If you got a set amount of points that you're risking, then you're not trading smart money concepts, because the smart money concepts you got a specific place where you got to put your stop loss per the price action. You know what I'm saying? When I start swing trading, my risk will be different. Nah, you still want to have your risk in accordance to the price action. You want to put your stop loss. Your stop loss should always go in a place that invalidates your trade. All right, your stop loss is always going to go in a place that invalidates your trade. All right, so if you got if you have like a idea, you say, okay, we've come down and we've swept that low, right? We've come down into a discount of the range and we've swept that low, right? Then you say, okay, we've come back up and we've taken out this high, right? Giving me like a bullish breaking market structure, right? We come down, we respect the inversion fair value gap. We did close below consequent encroachment, but we stayed in, the body stayed inside of it, right? So now we should be going back up now. So let's just say we come back in, right? You didn't take a trade here. Price trades up and takes out this high and creates another fair value gap over here, right? So if you create another fair value gap over here, let's just draw it a little, right? Just say you create a fair value gap here, right? If price get up here, right? If price comes up here, right? Then when it trades back down, if you get long there, right? Let's just say you got a candle here, right? Expansion candle here, and then a candle here, right? So now your stop is below the low of that candle right there. Cause price, if we, you know what I'm saying, if this is our smart money reversal, this is our low risk buy, right? Once we come to this area of accumulation and trade back down into this imbalance right there, right? Price should not go below that candle there, right? If order flow is still bullish, right? And then you got areas where you can take partials, or you like once you come here, you can lock in some profit based off of if you formed the order block over here. You can trail below an order block, you can trail below a gap or something. You can use the price action to help you trail your stops, right, as you move up. And then you also want to always be thinking about, you're looking for your PD rates to enter based off of your dealing range, right? So we come here, we come there, right? This is our highest high and lowest low in this range that came down here. Down here, you're in the discount of this range, okay? We got relative equal highs above this range right here. So when we start to come back up there, right, and we get back above equilibrium of this range, right, you want to see price start to use this as support, right? And as it's using this as support, now you can look at, right, the bullish range that you're in, right? Let's say we come up here and break this high right here. We come up here and break this high, and now this is where our bullish range, which is use that high right there, right? Now this is our bullish range that we're in over here. So now you're looking for a reason to buy, right? Right. So right here, if we go all the way up there, right, you're not looking from the low to the high there, right? Why? Because we have this low, and then that takes us up to there. So we're looking inside the latest expansion of this range. So now, right, you're coming from the low here up to, right, whatever the high is over here, right, up to the high. So when price comes back down, you're looking to buy in a discount, right, of this range right here. So there's your right there, what we talked about, right, our PD array there. You buying there, you're in a discount of your range, right? And now it's using the lower half of this bearish dealing range as support now, right? It's using this as support now, because remember, your bearish dealing range was from here, right, down to there, and there's your equilibrium of your bearish dealing range right there, right, at that new day opening gap, right? And then you're dropping down below equilibrium into the discount of your new bullish dealing range, and then using this bearish dealing range lower half as support to take you back up to the high right there, right? You're looking for PD arrays that's resting at these quadrant and octant levels for your high probability entries, right? I wish I would have been recording that, cause boy, look here. If that ain't tendonism, hey man, that's all I got, man. I'll just keep pulling up and asking questions, keep tapping in, go through the playlist and try to learn as much as you can about the concepts. You can go through my playlist. I got playlists on there. The Art of Reading Price Action, that's a good playlist to go through. You know what I'm saying? Go through. I tell everybody, go get it from Michael. Go study Michael core content. You know what I'm saying? All 12 months. get that down, and then you know what I'm saying, just tap in every day I go live, tap in, ask questions. All right. But you know, if you want to come out your pocket with the 150, I ain't gonna stop you, but I just feel like one-on-ones is a waste of time. Get it out the mud, you feel me? Hey man, that's all I got. I got hungry, right? I'm old school. I already took a shower, so now I can't leave the house. I don't know why. Us old black folk, once you take a shower, you can't go outside no more. You can't go outside once you take a shower. I don't know why they got they got us trained like that, but now I can't go outside. Yeah, tap in. I try to go live every night at 6 p.m. Right? I try to go live every night at 6 p.m. Sometime life be lifing, and so I end up doing it a little bit later, and sometime I don't get a chance to do it at all. But I try to go live every night at 6 p.m. And then after I do my live stream, the new format of the channel is when I do my live stream at night, right? I got it formatted where I go the daily time frame, drop down to intraday, then drop down and look at the New York session specifically. Then the next day at 9 a.m., that daily time frame video drop. Then at 12 p.m., that first intraday video drop. Then at 3 p.m., the deep dive into the New York session drop. And then we go back live at 6. So you got 9, 12, 3. Then I'm back live at 6 in a perfect world. All right. Hey, man. Till the next time I decide to get on Al Gore's internet and share my thing. Rewind that. Hey man, till the next time I decide to get on Al Gore's internet and share my thoughts with this thing that we call price action. It's your boy Timothy Lee Rogers Sr. I'm not a bull. I'm not a bear. I'm a beast. Yeah, man. AKA Aranya Grande. That's just me, Big Spot, if you know Hablo Espanol. Y'all be safe out here in these trading streets, man. Gone. Yeah.